Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for October 1st, 2018, the very beginning of the fourth quarter. So this morning, or well, actually I should say last night, after my webinar on 20 picks, we got the news that the U.S. and Canada reached an agreement on trade. So the market is extremely bullish this morning, and we're looking at a substantial gap up of nearly 200 points, or right around 200 points in the Dow. Now, one of the things I always caution about is chasing that morning gap. And remember, traders like me, when I'm holding long positions and I get a 200-point gap in the market, you can almost guarantee I'm going to be taking some profits. Okay, I consider gaps a gift, and the last thing I want to do is chase that opening gap. There is an emotion out there that messes with most traders, and that emotion is the fear of missing out. And let me just fix that problem for you here just a second. If the market is gapping up 200 points without you, you're not in long trades, then you've already missed it. Don't chase into that move. It is entirely possible that we could see profit taking come in, and particularly when we get up here at or near market highs, we have the potential of a whipsaw, which means we gap up in the morning, and then we immediately find those sellers driving the market back down. Now, it's possible, that's, by the way, that's how a pop and drop pattern gets formed, when we gap up in the morning and then drive down the rest of the day. So let's be really, really careful here. And by the way, let's kind of keep in mind that we gapped up these mornings, opened up high, and sold off the rest of the day. So it's entirely possible that that can occur, particularly at or near new market highs. Now, clearly the market is very, very bullish, and that doesn't necessarily mean that we will sell off, only that the possibility is there. So instead of chasing into this market, let's wait and see if we do happen to get those sellers coming in first thing in the morning, pulling it back, and then we wait for real buyers to step in and push this bullish move higher. So be really careful here, everyone. Don't get caught up in the hype and drama. Don't put yourself at massive risk by chasing into a 200-point gap, because 200-point gap can sometimes be filled. That means 200 points back down. So think about that as you plan your morning. Let's take a look at the market here without any bias to the market. Let's take a look and see that we are holding trend. We have a nice trend here in the diamonds, and that's holding. We closed Friday below this level right here, which is that all-time high, and this morning we are gapping up to that and maybe just through that all-time high breakout. So we'll have to watch that closely this morning to see if those buyers really come in to support that, or if this gap is just going to be a big profit-taking gap. So kind of keep an eye on that. Let's take a look at the SPY. The SPY looking at the same situation here, and actually just a little bit better, because you can see the SPY managed to hold above this all-time high breakout here, and it's holding above a price support as well, and everything is looking actually pretty darn good here in the SPY. So this morning we are gapping up, and we're gapping up very near, or just a tiny bit above this resistance right here. Notice that we're gapping up right here where we found sellers last week. So let's watch that closely as this morning gaps, and be careful not to chase. into this move, but there's certainly nothing bearish here in this chart at the moment. The Qs being all fired up and being the strongest of the indexes, being all fired up this morning, is looking for a substantial gap up, and as you can see, coming very, very close to those all-time highs. So as we gap up into that resistance, be very, very careful we don't see some sellers. This would be, you know, if you just draw this out, this would be the perfect potential setup if that were to fail there for a double top high. What we call a bearish M pattern. And now I'm not suggesting that's going to occur. In fact, there's no reason to believe that's what's going to occur. But the possibility does exist, and that's why you don't want to chase into a move like that. So watch that closely at the open. And then let's take a look at IWM. IWM had a nice little rally on Friday, and that looks like, as you can see here, just a little extension so far this morning. IWM is not nearly as excited about this move at the open as the Dow, the NASDAQ, and those kind of things. So keep that in mind and watch that closely. That resistance right in here is something we have to pay attention to and watch closely. So we have this trend, and you can see that trend is very, very well defined right there, and we're gapping back above that. But let's also notice that we are below this resistance, so there's quite a little bit of work left to do here for IWM to kind of get back above that downtrend. We'll have to watch that close, but IWM not quite so excited this morning. Let's take a look at the VIX. The VIX has been holding on to this support level and staying well below this price resistance level. And this morning, I'm guessing with such a big gap up, we are going to see the VIX gap lower. And with that VIX gap lower, I'm just meaning that there's little to no fear in the market, but that can also bring in the idea of complacency. If we get too complacent, that's kind of when we get caught. You know, we got pretty darn complacent in the market over here. And remember, we're right back up there at those all-time highs. So we got a little complacent here, and the market punished a lot of folks for chasing into that last little bit of that run. Same thing is possible here. So watch out for that complacency. It's a great thing to see very little or no fear in the market. So if we drop down in here, drop below this level, keep in mind we could see that market continue to rally strongly, but we'll want to watch for that maybe possible complacency move that could cause us some problems. Let's take a look at T21. 22. T21-22, the 4-week new high, new low ratio. And as you can see on this, we found that bullish reversal zone on Friday. Didn't quite dip all the way down here as far as we can, but we found that bullish reversal zone. Bounced right off of there and continue to look as if that is going to be a very strong move up this morning. And so just notice in here that these reversal zones do work, and we will probably shoot up substantially today with that gap up this morning. So watch that closely. But we also have to keep in mind that rally back also gives us the potential to move down. So we'll have to remember not to just be blindly chasing into the market. We need to watch very closely what's going on. Let's take a look at the economic calendar for today. We have quite a little bit on the economic calendar today for a Monday. We have 3 Fed speakers today, one at 8:30, one at 11 o'clock, and one at 12:15 today. By far the most important thing on the calendar today is the ISM manufacturing report at 10 o'clock, and that is expected to show good numbers. So Nothing there to really move the market down. And please keep in mind we have the PMI manufacturing at 945 and construction spending at 10. None of those would be expected to, or are expected to create some kind of a big bearish move or in the market, unless there's some kind of really big surprise, which no one is expecting. So I wouldn't think that we're going to get economic news today that's really going to damage this bullish move this morning. On the earnings calendar, we have about 15 companies reporting earnings this morning, and really the majority of them are like penny stocks or stocks that are really, unless you own them, not likely to move the market. There is one, probably the most notable of the day, SFIX, will be reporting after the bell today. So kind of watch that. But other than that, not much going on the earnings calendar today. So with that, everyone, I want to wish everyone a fantastic day. I want to wish you great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons and drop a comment. And always please feel free to share these videos with any friends and family. Everyone, I want to wish you all the very, very best. Be careful. Be careful of that emotion, that fear of missing out and chasing today. And with that, everyone, have an awesome, awesome, profitable day. I will talk to you all bright and early on Tuesday morning. Take care now.